Now we have Pankaj Pandey who's coming in to talk more about fundamentals. Pankaj, I'd like your opinion on Exide. In fact, both the battery companies, Amara Raja and Exide, have done pretty well in the last, say, few weeks or so because people started realizing the value which they, just like Bajaj Auto and TVS, beyond legacy, people started recognizing their EV initiatives and business which has grown. These guys also, apart from legacy battery companies, are now increasingly being seen as EV battery and recyclers as well. Uh, do you think market will continue to focus on that angle more than the quarter to quarter what they report right now, or you think quarterly performance will weigh over the previous hypothesis?
So hi, good morning. Thanks for having me. I think on Exide, the overall numbers for the quarter looked slightly lower than what our estimates have been. So while volume growth for the industry was some 16 odd percent, the company's top line grew by 13 odd percent. And so which is why numbers were slightly below expectation. But I think Exide and Amaraja, we like both the companies largely because of the perspective that Exide is one company which is taking tangible steps in lithium-ion battery manufacturing space, and it will be the first EV cell manufacturing company. So obviously, it has or it will get a first mover advantage. So this is one stock which has been our conviction buy for some time, and with a target price of 335, we'll review the target prices. We like both the companies structurally. I think valuation-wise also is quite comfortable for both the counters.
Another company which came out with very good set of numbers yesterday, Pankaj, and that is a rating agency. Again, not very often discussed, but look at how CARE ratings have come out with spectacular numbers, and one would expect that. I mean, in a booming economy, obviously the work for a rating agency to rate the paper, improved borrowing, for corporate India, if the paper goes higher, all of that work and a lot of consulting work which these rating agencies have started doing at 187. Have you looked at the numbers of the valuations? And especially, there were half a dozen other rating agencies which had come up, which the regulators clamped down upon. So now it's almost like a oligopolistic market. Only the top tier, CARE, ICRA, are the ones which are getting bulk of the work. Do you like that stock?
So haven't really tracked the company, but structurally, yes, things will look good for some of these rating agencies because government or RBI is also sort of pushing banks to sort of chase corporate bonds. Plus, also even a lot of fundraising can happen from the corporate side. So obviously, that will require rating as a services. So outlook is good, but I think within the BFSI space, what we like the most is most of the PSU banks. I think these are the banks where credit deposit ratio is quite comfortable. Overall asset quality has been sort of fine for most of the banks. ROAs are inching towards one, or some have even crossed more than one. So I think PSU banks within the BFSI space look very attractive to us for the next 3 to 6 months or even for a year.
Sure, that's good to hear. But Pankaj, what's the view on IT? Especially, the numbers coming out from Tech Mahindra, even Birlasoft for that matter, were quite strong. What do you make of it?
So Tech Mahindra 1% or 1.1% growth obviously is better than what was anticipated. I think the bigger overall improvement is expected only when the company comes out with the full year guidance after next quarter. But I think this is one company which hasn't done much of a price performance trading at 13, 14 times. Our sense is that probably a change in strategy from M&A led growth to a more organic growth will be a key positive. And margins have bottomed out. So we are liking Tech Mahindra quite constructively. I think on Birlasoft also numbers were quite good with 1.8% kind of a growth. So this is one company which also has been sort of doing well in the tier two space. Margin at 16 odd percent looks sustainable. So from that perspective, even this company also looks attractive to us.
Okay, so that's it. And also what TVS as well as Bajaj. So I want to, Pankaj, ask you about those numbers because TVS, we were working with that 10% margin and we're very excited when that happened. It's already now past 11. And apparently, now Bajaj Auto is expected to come up with a CNG-based Chetak next year. What do you see the prospects of these two companies now?
So on Bajaj Auto numbers, especially margins at 20% are pretty good. This is despite the fact that there was a bit of adverse product mix, three-wheelers being lower compared to sort of two-wheelers. I think the numbers were good for Bajaj Auto. The only challenge is that it's trading above long-term averages in terms of valuation. And also the export segment of the market will take some time to sort of recover because some of the key markets are still sort of struggling with the dollar shortage. But don't expect much of a downtick in the stock because numbers were quite good. I think TVS continues to remain an outlier, especially given the fact that now EV volumes are nearly 4.5% of the overall numbers. I think that is one thing which is sort of helping the stock keep outperforming their respective peers. So I think so TVS looks structurally more positive if they are able to sort of keep doing well on the EV side. I think Bajaj also is also okay, but valuation wise, like I said, is on a higher side. So which is where between the two TVS relatively looks better.
The other stock which I want to discuss this morning, extremely important to bring up, is that the way how some of the manufacturing companies are widening their services bouquet. Pull up Amber. What has happened this morning is that Amber Enterprises, the stock has already started moving from 32 odd to almost 38, 39 odd and tipped off. Kunal, I'll come to you on that one in a bit. But what has happened is that Amber Enterprises this morning has announced a joint venture with Titagarh Wagons. Yes, that's correct. A company which is into engineering services for electronics and consumer durables and ACs, of course. Yes, that was their biggest legacy business and is now kind of gradually tilting towards railways, because there's a lot of work in railways also which complements their current business model, and not many know that they are also ramping up their heavy air conditioning business, which is actually railways. And if you've been traveling by railways recently, you would see that the quality of the new India railways actually is going up. All of them are air conditions, and we're talking about what is this new railway which every now and then our rail minister keeps on, what's that?
Vande Bharat.
Vande Bharat. Every Vande
How can you
Bharat
forget
has got
that?
high quality air conditioning, and Amber has entered that business. So that can be a big institutional business. Now they've also entered into a joint venture with Titagarh. They're forming a company. We'll get the management and we'll probe them a little more. But Pankaj, if they indeed move away from traditional AC to all these railway related opportunities and much more, would the street give them a slightly different multiple?
So don't track this stock. Won't be able to comment. But we see a lot of companies venturing into railways. I think Ramakrishna Forging, for an example, is venturing into wheels. So from that perspective, railways as an opportunity is looking very good. Only worry is that the kind of front-ending of revenues which is being built, or the kind of valuations some of these stocks are commanding. We would prefer if there is some bit of a consolidation which happens in between.
No problem. We'll get the management.
Long weekend. Okay, let's take you through some of the other top stories that